When Brian Moynihan took over as CEO of Bank of America on January 1st, 2010, the place was definitely not in great condition. It had just gone through a series of mergers, including the one that brought Moynihan to the bank through its acquisition of Fleet Boston just 6 years before.
Before Fleet Boston deal, Legacy Bank of America at that point probably had 100,000 employees. Fleet Boston had 50, 60,000. Then Merrill had 60,000, let's say I had 15,000, 20,000, Countrywide had 40, 50. More people came from the outside and not. And so one of the things that the team and I had to settle down is, what is the culture we want, what are the values?
Going into 2010 when you took a job, it was a different world.
Well, so a lot of people don't remember that in 2007 and 2006 is actually when the financial crisis started to come through. The property values started going down, the overlending and the consumer side became exposed, the ripple effect through some of the CDOs and things like that, the impact on what you had was non-banks that weren't governed by any rules. They were all brought in the banking system and the net was thrown over, the tent was thrown over a lot bigger group. That's what made it different coming out the other side, because suddenly it wasn't just the banks and then the securities firms over here or the insurance firms over here. And that then required all the rules to change fast and all the reach to change fast, and stuff people hadn't thought about. The Volcker Amendment and this stuff, stuff that people hadn't thought about. And that was because suddenly you took all these people who were governed by different regimes, different rules, threw them in a pot and said, we're going to put a tent over all of them.